So the profit was resulted from which? The selling price or the price we paid?
Price we paid.
Price we paid. That's where your profits are going to be made. Okay? So keep that in mind. It's not in what you sell it for, it's what you pay it for. Same when you're buying a business. It's not what you sell it for, it's what you paid for it. Okay? Any questions? Is everybody suitably stunned?
I've seen this before, so I'm not that stunned. I wrote it down.
Suitably impressed?
I'm impressed.
Okay.
Just a couple of comments. Doing this the wrong way can be a bit of a drag. You don't really make much profit, and it's a lot of work.
Greg will tell you all about that too.
What's the
I've always made profits on my investment properties.
what's your secret with regards to remote management in Saskatchewan? What sort of, like, where would you find a property manager in Melville or whatever, and who have you gone to? Or what sort
Yeah,
of
well, the first thing you do is listing realtor. Ask him who are the property managers in town. Okay? And in this case, the listing realtor was also the property manager of this property. Okay?
Cool.
And he did a great job, and he's really undervaluing himself. He actually charges $25 per unit, so it's really $75 a month. And
Now, what does that work out to in percentage? The old rule used to be 5% for maintenance, so 5% of your rent income should be allocated to maintenance, another 5% to property management.
yeah.
So if your rent was $1,000 a month, you'd be losing $100 per month for those two items.
Right.
What does it work out to in your case?
All I care about is there's positive cash flow at the end of the month.
So it could vary.
Yeah, so I ask them, what do they charge? And then I factor it in.
Okay.
And as long as I've got positive cash flow, I don't care what he charges as long as he does a good job. But if they're doing something crazy, like they want $500 a month, I go, wait a minute, what are you going to do for $500 a month? Right? Besides collect the rent and take the odd phone call.
And go golfing.
Yeah. You know, so that's when you really got to look at what the property manager is going to do for you. And some people will say, well, no, I'll just save the money and I'll be the property manager. Don't even go there. Because that's the one reason why everybody stops doing this. Because of the headaches of dealing with the renter. Now, the other thing you got to do is choose your renters wisely. You tell the property manager what kind of people you want in the place. And you don't take anything less. Because if you do, you will get burned. Okay? You want good people, good references. They got money, they're making money somewhere, a steady job. Preferably, you know, let's say kids too. We say no pets, no smokers in our properties, for example.
I actually met a lady who only rents to pet owners.
Well, yeah, there you go.
She has a lot of renters that she can pull stuff from.
Yeah. Yeah, it's creating that niche. But again, it's setting out your rules of what you're going to invest in, and it all boils back to making sure you get the money, and that starts with, putting money away every single month in that profit account.
What do you factor in as a vacancy percentage?
Doesn't matter with this. Okay, as long as I
Just
see
in your budgeting for a property, though, there's
no. Well, what I do is I want to make sure, like in a multifamily unit, that as long as one unit's occupied, all the costs are covered. When you factoring in a vacancy rate is when you're talking like an apartment. Then you worry about vacancy rates like 5% or 7%, whatever the norm is, right? But for a, you know, like a 3-unit jobby, I just want to make sure my costs are covered by the first person and the other 2 are profit. After that, I don't care. I don't want to make it too complex. Okay? Any questions? None? All right. Here's my 2 offers.
Well, I have a question.
Yeah.
You were going to talk about borrowing to invest.
Oh, that's...
You just rushed me off. Or?
No. The only borrowing I look at is getting the mortgage.
Down payment.
Yeah, well, no,
mortgage.
The mortgage itself.
Yeah.
If you can borrow money from other people to buy the properties, and pay them and still have positive cash flow, then fine, do it. But most people who will rent you the money are going to charge more than the banks do. Okay? So that's something to keep in mind.
I know, but if I'm buying in Edmonton a couple of properties and we're looking at $75,000 cash down,
Yeah.
You have to have
so
the
many
cash to
properties
start.
I can buy.
Yeah.
You have to have the cash to start, or you don't buy.
Cash to
That's what I'm
start.
saying, like,
Whether you get a pool of people together and say, let's pool our money, and based on how much we put in, that's the division of the asset we own, or however you structure it, you go for it. See, one other advantage is your own property. You can get a secured line of credit on it and pay interest-only payments, and when you write a check off that to invest, the interest is a tax write-off.
well, that's more where I was going with the
Yeah.
line of credit, because I'm only getting charged 2.5% on my line of credit.
Absolutely. Because that interest